Hello, welcome to the 2014 IHS World Petrochemical Conference. I'm delighted to be here with Peter Huntsman, CEO of Huntsman. Peter, thanks for joining us this year.
Very glad to be here.
Big theme of the conference is obviously shale and the unconventional energy and the impact on the U.S. chemical sector. What has that meant for Huntsman? What impact has it had on your operations?
Well, I think it's had an astounding, from a macro sense, Rob, 3 or 4 years ago, well, let's say 4 or 5 years ago, of our discretionary capital, that's capital that's not going into environmental health and safety, we would end up spending probably 10% of that in North America. Today we're spending maybe 75 to 80% of that in North America, which means that our future growth prospects and so forth are taking place in North America. And that's precisely around the economics, the favorable economics and competitiveness that we see around shale economics.
Great. And I know, I think you've recently disclosed a capital spending target of about $500 million this year, and that includes your ongoing Port Neches CO expansion. Can you give us an update on that project?
We're still on schedule. We expect that project to be coming into the market the middle of next year. We actually won't be selling any ethylene oxide into the market. We'll be derivatizing that into surfactants, into amines, and into some glycols, but mostly into amines and surfactants will be our top priority there.
Okay. And give us an update on your China projects for PO, MTBE, and MDI.
Well, we continue to work towards, we've already broken ground on the PO, MTBE project in Nanjing. And the MDI expansion in Caojing, we feel that we're probably within a few short weeks of getting final Beijing approval for that project.
Okay. You also have, I guess, ongoing expansions of MDI in the Netherlands and the U.S.
Well, the expansion we have in the Netherlands is not necessarily producing more MDI as much as it is producing a further downstream variance in specialty. What we'll be looking at in Geismar, Louisiana, will be an actual expansion of MDI. And that's a perfect example, Rob. If you look at those two facilities, they're both roughly the same capacity, and the raw material slates are very much the same. What they're selling is very much the same. And we typically see about a $250 per ton advantage in North America that we don't have in Europe because of the raw material, the industrial gases and everything. That translates to two similar facilities just separated by the Atlantic Ocean. And what we're seeing in Louisiana is about $100 million per year more competitive than the European facility. Wow.
And given that type of advantage, are you looking at any other significant investments in the U.S.?
Yes, we've continued to look at projects such as methanol and so forth. Again, those are the very early stages. I think in many of those areas, if you're not already in the pipeline of being part of this wave of ethylene and methanol and so forth that's coming into the market, you're probably a bit too late. And I would think Huntsman, in many of those cases, we think we're probably going to be a buyer rather than a producer of many of those products.
Okay. So, I mean, what impact, I guess you're already seeing the impact on EPC cost and materials and labor shortages.
Absolutely.
Yeah, okay.
And then those impacts are really going to hit in about a year or so. This large project that we have for our EO expansion, that's about a $70 million construction project all in, and that's kind of just before this wave of demand for labor and so forth. So I think we're in pretty good shape on that one. But further out, I think for the next 5 to 10 years, it's going to be a pretty tight labor market.
Okay, great. And earlier in March at your investor day, you set a near-term Ebitdar target of $2 billion. I guess over the next 2 years. What are the drivers that get you to $2 billion in EBITDA over the next few years, and where are you going to be focused?
Well, we need to complete our cost reduction programs. That's going to be a partial step of getting there. Selling out our facilities will be another step of getting there. And then further value uplift, being able to take our products and derivatize those products into further value added components. And of course, the successful completion and integration of the Rockwood acquisitions. But if anybody would listen to our investor day, you need to access that on huntsman.com. You'd I think, be able to see on a division by division, product by product basis how you get there. And there's no one single leap of faith here. We're not dependent on any single particular turnaround product or revolution taking place. It's really just hitting the basic objectives that we've set forward. And I think that we're going to be able to create a tremendous amount of shareholder value in the next couple of years.
Okay, great. And final question, what's your current assessment of, I guess we'll start with in the U.S., the conditions in U.S. chemical markets? Are you Are they providing more of a tailwind this year than they have in the past?
I think we're seeing demand gradually continue to improve. The U.S. is certainly benefiting from lower raw material costs and so forth. Housing, automotive, energy sector, any of these sort of areas, I think investments around infrastructure and so forth is something for us that continues to be growing at better than traditional or present GDP sort of rates.
Like, what's your global outlook beyond the U.S.?
Well, I continue to be quite bullish on China. We sell quite a bit to the domestic Chinese economy, and I think that we continue to see strong single-digit growth in the particular sectors where we're investing. Europe, I think this year, particularly Northern Europe, will probably see something of a 1% sort of growth. In certain areas, you'll see better than that. But Europe probably is going to remain somewhat lethargic, trailing North America, trailing the Asian markets. And Latin America, probably not. That's not a big market for us, but certainly not seeing the growth that we saw there a few years ago.
Great. Peter, thank you very much for joining us.
Well, thank you, Rob. Always nice to be here. Thank you.